Thank you for tuning in to Investment Insight presented by McCay Wealth Advisory. My name is Hayden Proffitt. Joining us today, we have Brent McCay. And Brent, a topic we kind of get this time of year, Qualified Charitable Distribution, QCDs as they're called. It's something we talk about a lot this year, and I think it'd be helpful just to explain what they are and kind of how they work.
Yeah, of course. So obviously QCDs, we're not tax advisors, and we don't pretend to be accountants or to do people's tax returns. And so what a QCD is, a Qualified Charitable Distribution, of course, is where you give money out of your IRA when you're over 70 and a half, the original RMD age, to a charity. Because the way we understand the tax code, and of course we want you to seek out a good accountant, is if that money goes straight from an IRA to a charity and you don't touch it in any way. So you fill a form out with us where Charles Schwab will send that money straight to the charity of choice. Then that money, we believe, is not considered to be taxable income on your 1040. And so one of the biggest things we see, as you know, is we see a lot of people miss this. Because on the 1099-R from Charles Schwab, they don't say if the money goes to charity or goes to your checking account. They just say that money left your account. Because Charles Schwab is not going to tell you what charity is good and what charity is bad. Because if they actually put it on the term that it was a tax-free event, then they're basically saying your charity is good and you can't give to these ones, you can't give to that one, to that one. And so what a QCD does, of course, is that money goes straight to the charity and it's not considered income. So that means you can still get the standard deduction, and that money that went to from that IRA to charity that might have been part of your RMD won't be considered income. So it's a way to give money away, not have it be income, and still get that standard deduction to lower your taxes.
Right. So it can't go from your Schwab account to your checking account and then the charity.
Correct.
For this, it has to go straight from Schwab to the 501c3 or whatever the non-for-profit organization is.
And one of the things within the IRS code that at least the way we've read it, is that money, you cannot touch that money. At some point, if you're writing a check off your IRA, even though that is what a lot of people do, you technically have touched the money in some form or fashion. So that's why we do additional paperwork to send that money straight to charity. Because a lot of times, if you're not giving more than $13,000 away per person, well, in this case, more than that, because you have to be over 65 to get the deduction. So if you're not giving $14,000, $15,000 away per person, you don't get a tax deduction, because you don't have enough deductions to make it work. And so this is a way for you to still get that standard deduction, but not have that money be considered income. But you got to tell your accountant that you did it. And if your accountant doesn't put it on the form right, remember 1040, 4A, 1040, 4B. 4A is how much money comes out of your IRA, and 4B is how much is taxable. 4A and 4B.
It's a key distinction to look on the 1040, because there is those two boxes. And I think that it's something you definitely have to look at.
Absolutely.
So it's something we double check as well. If someone
we do our best. Obviously, we're out of the business of tax planning. We do some planning, but we're not a CPA, so you want to see that competent professional. We don't pretend to be accountants.
Right.
Now, there is a limit. Of course, you can't give more than $105,000 a year in 2024 for a QCD, Qualified Charitable Distribution. So if you want to go out and give $200,000 away, it doesn't work. $105,000 is that limit for 2024.
Right. Gotcha. And I mean, I think one thing it helps with is that not only do you get to reduce your income, but you also get to help out a charity along the way.
And you should be able to give more, because you're not paying taxes on this money. You should be able to give more money away to charity. So it does make it easier. It is easier, of course. A lot of times in the process, we'll send the check to your house, written to the charity, and then you give it to the charitable organization, because we have a lot of charities that forget to cash the checks. About 3% of the checks we send out, when we're sending them straight out to charities, we're not being cashed, which is crazy that people don't cash checks. But look, charities are in the business of providing help to people. They're not in the money business.
Right.
Just like we're not in the tax business. And so you really want to focus on what you're good at, and that's one of the things that it's good for you to give that to charity, so it gets positive. It's also a good thing to show your like when I give money to church, it's good to show my kids that, hey, we're giving. This is what this is, and teach them what that is, because so few people know about giving in general.
Right, and show that have that kind of selfless attitude too toward that.
Absolutely.
Okay, and then kind of hitting on this as well. Donor advised funds. Can you kind of hit on how that integrates in?
Correct. So like one of the things with a donor advised fund that a QCD is a little different is if you give money out of your IRA to a donor advised fund, it has to eventually go to a specific charity. So they do not, under the current law, you can't give the money to a donor advised fund and give the money later. At that moment, when you give a IRA distribution to a donor advised fund, you got to say eventually this money is going to go to the, Westwood Church of Christ or the Boy Scouts of America or First Baptist Church of Manchester. And so you actually have to designate that as eventually getting the money. So one of the things with donor advised funds that is specific for IRAs and QCD distributions, it may not be the best avenue to give it to them because you have to put that charity on there. Donor advised fund is where you give the money to charity now and you can decide later what charity gets the money. Now, if you wanted to have a big gift to a donor advised fund and you're trying to give them some money over time, that's a way to do that. Remember, it's still a $105,000 a year limit. So for a donor advised fund, a QCD may not be the most appropriate thing. But donor advised funds are really cool because you can give that money to charity now, you get the tax deduction now, and later on you can decide when that money goes to charity. And that money can earn interest for decades, years, generations before it actually has to go out to the charity.
Right, and that's awesome. So let's say that you are over 70 and a half and you've taken advantage of some of these QCDs or donor advised funds, right? You've taken advantage of it. How do you need to make sure that your accountant kind of keeps track of that? Or what would you do in order to make sure that
That's a great question.
that all of those distributions are encompassed on the 1099 or on the form that the tax accountant would get?
The first thing we always recommend people is let us know when you're going to your accountant so we can call your accountant and explain what you did and how much you did.
Yep.
You're paying us a fee. Let us do the work to help them out.
Right.
If you want to do it yourself, which is perfectly fine too, tell them you did a QCD, Qualified Charitable Distribution, out of your IRA. Tell them how much money it was and explain to them and double check your tax return. Make sure 1048 shows how much money you pulled out of your IRA and 1040B shows how much was taxable.
Sure.
And all you got to do is if you pulled 50 grand out of your IRA and $10,000 of that went to charity, then $40,000 would be taxable. So and one thing people get they look at software and think, oh, taxes are so complicated. Pull that 1040 up, pull up line 4A and 4B, and then just check it.
Yeah.
Just check it before they submit the return.
Right. It's beneficial just to pull up a blank one and be like, oh, so this is how AGI is calculated. But of course, seek out a competent tax professional on that.
Exactly.
As well. So, and then, like we said, this is kind of one of those things that we're seeing kind of not hot button issue. It's one of those things that can get easily missed by accountants.
All the time.
We emphasize double check the numbers, double check the software,
As a lot of people are doing taxes right now.
Yeah.
They need watch this in your return. Make sure before you submit that button to look at it. And one of the things we do here in our office is if you want us to kind of glance over the return, we're not going to be the accountant, but we're happy to look at it and see if there's anything we noticed off the topic that could be missed. Bring them by. We're happy to look at them.
Yeah, absolutely. So, well, thank you so much for talking about QCDs today, and thank you so much for tuning in today.
Have a great day.